Okay, I'm gonna start. I'm gonna start. Okay, guys, I don't know if you can hear me. I'm gonna start now.
Go ahead, boss.
Okay, sure. Okay, thanks. Okay, so what I wanted to discuss with you guys is moving averages, right? And how it's best to use them for entry, right? So I believe they're the best thing to use for entry because they are reliable. Now, one of the reasons why I use moving averages is because um, I just want to show you something from okay. We have been taught, right, that these are trend lines, right? We've been taught to analyze charts using trend lines and saying that this means that this is an uptrend and opposite way around. If this thing goes down, this is a downtrend, right? Now, one thing I do not like about those type of trends is because okay, number one, the market is moving, right? It's constantly moving, and those lines are not moving when you analyze them. They stick to where they are. So if a market moves in the next 4 hours, that line still stays there, right? So now with moving averages, they move with price, right? And that's why they are more reliable than trend line. Okay. So now I'm gonna show you which moving averages to use, right? We're gonna be using. Number one moving average we're gonna be using, insert uh, indicator trend moving average 200, right? 200, always be blue. It's easy. There's a reason why I say always use these colors. I'll tell you later, but try 200 moving average method exponential. Try and make it always to be blue, right? Number one, that's the moving average. Okay, cool. Take note. Just want to write them down somewhere so you can see them. I'm just typing them down here. The first one, 200 EMA, right? Okay. The second one will be a 50 EMA. Okay. Now, the 200, we're going to discuss the 200 first, right? The 200 is always the trend on 15-minute chart, right? 15-minute chart, 200 is always the trend. Why am I saying this? You will backtest yourselves, right? But if you look at this chart, as long as price is above the 200, the trend is an uptrend. When it breaks below, it's a downtrend. When it breaks above, it's an uptrend. So now, for instance, in this specific pair, what you need to watch with the moving averages, they need to point in a certain direction, right? So this moving average pointed up and the candles were on top. That means we're going in an uptrend, right? Then it started trying to move down, tried to point down, then it became a downtrend. Okay, started pointing up, not really up, but sort of up, and it became an uptrend. Now, in this current moment, it's moving sideways. What does that tell me? That trend is ranging at the moment, right? Right. And now it's starting to point down, and that tells me that as long as price is below this moving average and this thing is pointing down, that means I'm in a downtrend, starting a new downtrend because it moved from sideways to down, right? Okay, cool. Any chart, if I pull any chart, it makes it easier for me to know what's the trend in any chart, right? Without having to even analyze sometimes. Okay, USD CHF, I'm just gonna pull it there. You already know what's the trend because of the 200, right? Pull another one. We already know it's an
How are
uptrend,
you?
right?
I know.
By using the 200, I know it's an
Well, we
uptrend.
didn't do
And the
the
nice
cards
thing
because
about
like
this
you know
movie,
the patient was very
price
young,
usually
like I think
bounces off that,
18 or
right?
something, so we didn't
So
know
right
what
now,
ATL.
price has been bouncing below the 200
No, not graph links.
downtrend. As
So we
soon
were
as it
using
breaks through, look what
two
happens.
tendons,
Goes up,
but not
bounces
from
there,
the artificial
for me
ones.
to
So yeah.
continue because if it broke through, I would have known, okay, maybe it's a change of direction. But because it bounced on the 200, the confirmation
Because you're gonna cut
T,
it
came
off
back.
where he didn't want you to cut it off.
What is the trend on
T,
this one?
T.
Hello?
Yes. There's a lady that's
Yes,
speaking, and
and you were
it's either
doing the
on your
we doing the
background
hands that
or
you did
somebody who joined
moving
in
on the
I'm speaking to?
doesn't
on
have their
the
mic off.
yeah.
Okay, I'm speaking
I
to?
must just remember not to
You're
cut.
speaking to Mwegit.
Okay, so it's Tepo. Okay, I'll mute Tepo.
Okay.
Thanks, bro. Thanks. Okay, so what's the trend on this one?
It's an uptrend.
Okay, thank you. Okay, so you get it. Okay, I pull anyone, I already know what trend's happening and where to enter. Basically, if I've been looking for an entry for a buy on Euro USD, I would have waited for something like that. A break on the top side, number one. Number two, I would have waited for the moving average to at least point in that direction, right? Because if it's moving sideways, it could play in and out, in and out. But as soon as it points in a certain direction and it breaks through on that side, then I know it's an uptrend. Okay, I'm gonna pull another one just for interest sake. Okay, this one, Euro JPY, right? When it moved sideways, that was a ranging trend. Now it's pointing in a specific direction. Now I know that there's a possible downtrend. Okay, so obviously we always look for, we analyze on a on our what you call it, what we can call it,
Bigger time frames.
our bigger time frames, right? We always analyze on a bigger time frame. So let's look at something. Okay, we've been looking for a sell on Euro GBP and a buy on GBP CHF, right? I'm gonna GBP CHF, right? So let's say now I see, okay, I see that price has been bouncing there, bouncing there. I'm looking for an entry to the long, right, on a weekly time frame. So what I'm looking for in GBP CHF is only long entries. Okay, I'll go to my platform, right? Look for GBP CHF, good shot. Now, I'm from this, it's telling me that it's not ready for me to enter. It went downtrend. Here I could have entered. Then I knew exactly where to exit, because if it breaks that line, then I know it's time to exit. Wait for another entry. Only when it's above the 200 and the moving average is pointing to the top side, then I know it's a good time to enter. Okay. Now 200, if you just remember that the 200 moving average exponential is your trend, you will never be caught in a big pullback on your trade where you are in a big minus. You know exactly where to exit, and you know exactly where to enter, and you know exactly where your mistake is. If you back test this 200 moving average, you'll see that it's reliable, like all the times reliable. We always look for quick entries because we see these weeks and say, yeah, let me enter there. But the safest place is using the 200 moving average. Above the 200 moving average, if you are buying, below the 200 moving average, if you are selling. Okay, right. That was the first one, right? I did say there was more. The next one is the 50 EMA. Okay, I'm going to put in the 50 EMA, and the color should be red. So with that, if I'm looking at your chart, I understand exactly which moving average is where. Okay, I'm going to put in the 50. I want to make it red, exponential. Cool. I've got two lines now, right? The 50 and the 200. Okay. Now, one thing to note is the higher the moving average, the longer the time it takes to turn. right? So 200 takes longer to turn compared to the 50, but they are both reliable. Okay, now the reason why I put the 50 is for those people that want a quicker entry, right? If you were looking for a quicker entry, you use the red one, right? The 50. Okay, I'll just show you some charts on it. I want to show you something. Okay, let's say I was looking at GBP USD. The blue line, which is my trend, is telling me that it's a downtrend. Okay, the 50 is holding. It's holding the trend also, holding the trend also. So price is either going to bounce on the 200 or on the 50. Okay, but the 50 has been holding it, holding. Then the 50 starts moving to the side before the 200 decides to turn. This is telling me that, okay, I must be careful of my trade because it could turn that, change direction. Okay, but it hasn't broken the 200. Okay, cool. Came here, held, didn't break through, still in the trade, still going down with it, going down with it, going down with it. It's coming in here. If I feel like taking profit, yes, because I'm scared, but for an early exit, but still I'm in the trend, right? My trend hasn't shown me a change of direction. Okay, still moving down, right? Comes here to the okay, comes here, breaks through. Okay, I'm still saying the trend is still down. Okay, held the trade from there on top. Guess what now? Price is now above, right? Above. Now it's telling me that it's a change of trend. The trend could possibly change now to the upside. Okay, cool. Now, what I wait for is the crossover to confirm. Yes, it has broken above. It could break back below, but as soon as there's a crossover, then that's a confirmation that, okay, no, it's definitely a change of trend. Do I still have everybody? Everybody understand so far?
Yes. Can I ask a question?
Yes, you can.
Let's say if you go back there where it first showed you will be going on a downtrend, né?
Yeah, right? Okay.
There, yes. Isn't it safer to say that's where you will take your entries?
Yes.
Where we have the crossover.
Yes, 100%.
Okay.
Yeah.
Okay.
Also a safe, but just don't look at the crossover all the time. Compare the crossover with the blue moving average. Né?
Okay.
Because why I'm saying that is, look, here was a crossover. Né? Here was a crossover, right? But it didn't last. You know why it didn't last? Look at the 200 moving average. It's still moving sort of to the side. It's not showing down a clear down, like pointing down, like it is here.
Okay. Okay. Now I get you.
You get me? Okay. So yes, look at the crossover, but just look at how. Okay. Another thing is the more the distance between these two moving averages, the stronger the trend, right? So when you see them very close to each other, it's not ready. But once they start splitting and coming further away, that means the stronger the trend to that side. Look what happens when they come closer. When they come closer, the candles come closer as well, wanting to break to the upside, right? That means the trend is no longer strong in the downside. Now it's moving sideways, right? But still, the 200 is my main factor to say only when it breaks the 200 will I think of exiting this trade. Okay, it hasn't broken through. What happens? It touches there. What happens? They split now. The further they become from each other, then I know it's the stronger the trend and more reliable, so I can hold with confidence. Okay, so it held. Now look what's happening here. They're coming closer to each other. There's a crossover, and then now, as long as they stay far apart from each other, it's a reliable trade to the upside. When I see them getting closer, then I start worrying. I can pull any pair, go to the next one. Just by looking at it, I understand that concept, right? I'm just showing you some pairs. I'm just scanning through so you can understand it better. Okay, I'm gonna start from somewhere here, just for interest sake. Okay, downtrend because price is still below the 200. We're moving down, holding. The moving average 200 is pointing to the downside. Okay, and the 50 is pointing to the downside. Then the 50 is saying, okay, I want to change direction. If you want an early exit, maybe feel free to exit. But the 200 is the main one. Okay, I'll wait. I see the crossover. What do I do? If I'm in a buy, looking for a buy, I'll enter that buy. But if I'm seeing that it was actually a sell, then I continue holding. Maybe I exit here. Look. So basically what I'm saying is, okay, let me show USD CAD chart, long-term frame. USD CAD, weekly. On weekly, I saw one thing that, okay, from a weekly time frame perspective, I could see good, okay, this has been an up, down, right? Up, down. This is my support from a higher time frame. This is my support. If it bounces off there, then I would have went up. But it broke there. My next trend line is there at the bottom. There. That's where I'm looking for my support. So what am I looking for on a higher time frame? I'm looking for sales right until this point of 129,656. I'm still looking for sales on USD CAD. Good. Okay. So that means when I'm looking at the charts and the moving averages on my 15-minute chart, I'm only looking for sales until that area of 129.6. Okay, let me go to my chart. 129.6 is somewhere right here, somewhere there. So if I was selling from that area where I was looking at, I would have only looked for sales. Held there, okay, held myself, okay, exited there, right, wait for another crossover, a good one, okay, there's another entry there because I'm only looking for sales till that area because I analyzed on a higher time frame. That's what happened. Crossover, kept it down, showing a downtrend. I'm in the right trend. Cool. What happens now? This thing is moving sideways. Although there's a crossover and crossover, I do not enter because it's moving sideways. What happens? It splits and creates a gap. It's going up. Not looking for entry. Next, that's where I'm looking for entry. I would have entered there because of that crossover and they're both pointing down. I would have waited till they not entered because of a spike or anything. The safest place is when the moving average, they're below the 200 moving average. I hold, wanted to break out, didn't hold. I would be holding until I get to that area, right? And see what happens. Then I'll come back to my chart and see what happens in that area. If I see blue candle, then I'll be looking for a buy. I mean a green candle, then I'll be looking for buys only, maybe to the top side. Depending. The most important thing is to analyze your bigger time frame. Okay. Now we've been looking, you in Mr. Mrs. group, we've been looking for buys. I saw a print bar on the weekly last week. Then I'm looking for buys to the upside. I've analyzed that this is a good area. Print, it spiked there, it spiked there. I'm looking for buys for GBP USD. I'm analyzing my trend. I'm looking for buys. Basically, touch there. I'm looking for buys on a longer time frame, right? Okay. And then even the BXY is one of the indexes for British pound. Oh, okay. That's what I'm looking for from my side. This is my personal view of it. Okay. So I'm looking for buys on GBP. Cool. Because I see like a mirror image there. Mirror image, it bounced exactly at that area. I see it going up till there. Okay. But what chart I'm looking for, GBP USD, at the moment, I'm looking for buys there because of this analysis on the higher time frame. Okay. Go back to my chart. Looking for entries. GBP USD. Where is the safe entry? I could have entered right there. on that crossover, and I see it pointing up. Went up, gone up, bounced off there. This would have been a good entry for me. When it bounces off the 200, it's more of a confirmation, a good confirmation that it's holding. Bounced off there, held. Did it cross over? No, bounced off there. 2 bounces, I'm still moving up, right? So it's good for me to continue with my trade, the one that I'm looking for from the higher time frame of this analysis. GBP CHF, since we bullish GBP, CHF, looking for the bounce on the upside, go to my platform. It's not ready to go up. It's playing around sideways. I'm looking for the break to the upside first. Since GBP CHF is the inverse of Euro GBP, I also look at it from that side. I could have entered right there. It's like it's moving away, but you can see, and these moving averages are splitting further apart. So this means it's a good time to go down with this trade. It's pointing, the trend is saying down. They are splitting from each other. They're causing a distance there. 100%, I am going down. Got it? Any questions?
Let's say for okay. No, I wanted to ask about re-entries. Let's say if you're taking, yes.
Okay. Look, okay. Last time on I don't know if you were here when I was doing the Fibonacci, the Fib extensions.
That one I missed that one.
Okay.
Yeah.
Just send me a message on WhatsApp and I'll try and send it to you. We'll talk and then I'll send you the video because I do record these sessions and then send them to you when you want them.
Oh, we'll do.
Okay. So I used so far I've shown 2 techniques. It's this moving average. So re-entries, it's a matter of okay. Right now it's gone down, right? So I feel that this distance is too far for me to enter. Maybe it's time for it to retrace. Okay. Probably wait until it comes back and bounces off the red line. Or if I'm willing to risk losing that momentum, if it doesn't bounce there, then I wait for a bounce on the blue line. But I wait for a bounce on one of those moving averages and then continue. Then that's a re-entry, right? But now from the video of Fib extensions, it's a matter of all I said is just a short preview of it. If I see a downtrend and I see a retracement, right? I pull my Fib from where it started, where the trend started to where it ended, there, right? And then all the time I look for entries on the 50 and 61.8, that area, all the time. So if price comes there and I see a reaction and it falls, then that's a confirmation of an entry, right? Now losing my moving averages as well, I would wait for if it hasn't crossed or if it has crossed to see if the 200 is still above, and then I would enter, continuing down. Those are the nice entries, right? Then I enter there, one trade entered there. And I started there from the top, entered, then I entered there. Next one goes down, comes back up again, delete where's my Fib extension? Delete that, price comes down, pulls back. When it starts pulling back, I pull my Fib, right? Fib area 50 and 61.8. Pull in, highlight 50 between the 50 and 61.8. If it turns there, I re-enter, continuing down. But if it pulls away from the 50 and 61.8, it's time for exit. I would exit my trade. If it goes anywhere above 61.8, I would exit my trade so I don't have to lose that trade. Then I continue down. but the 51 and 61.8 is the one. But yeah, I'll send the video of that one. So yes, these are the moving averages that are most reliable, especially the 200. If you remember that it's a trend, you will never have a drawdown. You won't have a drawdown. That I guarantee. If you use the 200 as your trend, you won't have it. Now I'm gonna discuss, since I have time. I'm just gonna discuss my NAS, how I used to enter my NAS trade. Right. I'm gonna give you my personal secret to the NAS. Right. Okay. What I do with NAS, let me just save this template. Save moving averages. What I do with the NAS, right, and you can do this as well, I add another moving average, a last one. This is the last one. Insert indicator trend moving average. 21 and gold. So 21 equals gold. So I have my 3 moving averages. Okay. So I don't like everybody to use a 21 because now your chart gets cluttered. But if you're using a PC, it's fine to have this thing, different templates. Okay. So now here's my NAS. I open it up on 3 time frames. Let me just pull it. Damn, didn't save this one. Let me call it NAS Q, the one with the gold. Okay.
So can I ask you a question, sir?
Yeah, you can. Feel free.
So your trades, do you normally take them on M15 every time? Like you execute the trades on M15?
Yes, for entry, yes.
Okay, thank you.
Yeah, because look, we look at weekly for analysis in the direction, but for entry, I always look on the 15-minute time frame. Okay.
Okay.
Cool. NAS, okay. I open it. Okay, NASDAQ. The most reliable time frame from NAS is 30 minutes. I've done my research, and I'm 100% sure on this one. NAS on 30 minutes. That is the main time frame to use this, right? So, but I do open up the 5 minutes because I'm a scalper. I won't pretend like I don't enter as a scalper, because this thing moves too fast for me to just be looking at the 30 minutes. It needs a lower time frame. Okay, this is how I would look at NAS. I have the 1 minute, 5 minutes, and 30 minutes. Right. Okay, 30 minutes is the main time frame because the 200 EMA on the 30 minutes is the most reliable one for the trend. Okay, so this is what's been happening. This thing has been, we've been looking for NAS 100. We've been looking to sell this pair because it's too high. And every time it comes to a high, we would be like, okay, maybe it's time to sell. It breaks that area. Now it's time to sell. Break that area. We lose money. Now it's time to sell because I threw that trend. It can't break that area. Right? Can. But now let's go to this strategy. 200 is my direction, my trend. As long as the 200 is below, this trade is not ready to be a sell, right? Okay. Let's look if we started here. Right, bounced. I would have entered at only the bounces, not when it's in the middle of nowhere, because it can have a bad drawdown if you entered the wrong time. Bounced off there, I would have entered. Right. Held, maybe, bounced off there. As long as the 200 is below, I'm looking for buys, and I go buy. Now the 21 and 50 just tells me, okay, hold it, hold it, hold it, hold it. When those two cross over, then I'm selling. Not selling, sorry. Now I'm exiting my trade. I would exit. I wouldn't even wait for it to come here because that's a lot of money that you could lose if you have a big lot, like even 0.10 is big. Okay, right there. Okay, sure. Now this has been an uptrend, right? Sure. Now it broke through. Do I sell? It should be a sell, but I'm looking at my moving average and it's not showing me proper direction for a possible sell. You know, okay, I wait a bit, look at that line. Now they split, they go apart again. Okay, enter another buy right there. Continue with it, continue with it. On the crossover, exit my trade. I would have exited my trade there, right? Okay, possibly thought now it's a downtrend because now it's below the 200 moving average. But look at the 200 moving average on 30 minutes. Is it saying it's going anywhere? No, it's still going sideways. Try to point as if it's going down. Could have entered and gotten some money there because of how the split away, but it's not showing me a proper direction as yet. I could have though. I don't want to lie. That would have made me enter probably. Then I would have exited when they cross over, right? Looked for entry, probably could have gotten in there, looked what's happening, stayed in there. But right now, because of the distance between the 200 and the 50, this is telling me that it's still an uptrend. When these two, the 50 and the 200, come close to each other, then it's showing me that, okay, a possibility of a downtrend. But as long as they stay far apart, this is still continuing to the upside. Right. So what I've been doing also, using the same thing, you can get in on lower time frames. Knowing that the blue line is your trend, even on 1 minute, going to 1 minute. So what I've been doing, and I'm not advising everyone to do this, is I've been entering when on NAS on 1 minute, that breaks to the downside of the 200. When it breaks to the downside of the 200, and the 200 is pointing down on 1 minute, breaks through, points down, I would be looking for sells there. When it breaks to the upside, exit, enter there. So with the 0.1, with the 0.10 lot size from there, just from there, on a $200 account, till there, till just that distance equals like $30 on a $200 account. So am I stupid to use the 1 minute as my reference? No, because this is too long of a time for me, probably. I want to make money out of it if I'm a scalper, but I'm really waiting for breakout of this 200 and this 200 to point down before I consider selling. But currently looking for buys. So every time it goes above that 200, I'm buying. Keep on looking for buys until the time when this breaks that 200 on the 30-minute chart. So that's how I've been trading now. Any more questions? Then I will.
Okay. Can I ask about the 21? The significance of 21 EMA.
The 21 is like it gives you the crossover sooner.
Oh, for exits.
Yeah, for exit.
Okay. Sharp.
For exits, like let's say, how can I put this? Let me pull another one. Chart window. I say use the 21 just for if you're gonna trade NAS, ne? Not don't use it for any other pair. Just for the NAS if you wanna trade the NAS. But it just gives you a perfect exit, because if I'm here and using just the moving averages, right, for 30 minutes, right, I'll see that, okay, it's moving below the 50 and then try and exit. But if I'm here, that crossover tells me that definitely it's time to exit with the 21. So it just gives me a quicker exit, probably. But focus focus more on the 50 and the 200. The 200 is the main one for the trend for you. Even if you only use the 200 on your chart, at least you know that which way the trend is going. It's enough for entry. Because I just pull up any chart and I know exactly where the trend is going at that present moment. But I'm not gonna just enter buy when it's going up, sell when it's going up. I'm gonna use what I've been taught by Mr. Mnisi. I'm gonna go to the longer time frames and analyze it properly and see what am I looking for entries on the buy, or am I looking for entries on the sell. And then depending on that analysis, AUD, USD, AUD, USD. Okay. Like here, I would have analyzed on a bigger time frame, AUD, USD, reset chart, reset chart. I'm looking for buy.